Hey everybody, what's going on? I'm Fabian Calvo, Fabian for Liberty. Is the Federal Reserve really giving up QE? That is the topic of this video. Now, quickly, I just want to announce that the new Fabian Calvo Show app is live on the Apple Store or the App Store. You can just download it and get immediate access to all of my podcasts, all of my archived podcasts as well. Plus, if you subscribe, you'll get latest announcement every time I post a new show. Again, the Fabian Calvo Show, both available on Amazon for Droids and also for Apple devices on the App Store. Okay, so many of you know, if you've watched my work for some time, that I don't believe the Fed is ending QE. In fact, they've used alternative means to continue to grease the wheels of this gigantic credit bubble that they've created over $100 trillion, which will eventually all come crashing down. When that happens, no one knows. I certainly don't know, but I do know that all of the signs are that we are at the end of this particular business cycle with the money printing that is an unprecedented historic move by the Federal Reserve. That's important to note because other economies have printed money in the past. It's always ended badly. But to the extent that the Fed has done it, the Federal Reserve has done it, it's never been seen before. And it only brings to question, will the ramifications of money printing so excessively, knowing it's ended badly before, what will be the ramifications for the largest economy in the world, or now the second largest economy in the world since we've been surpassed, or since the crony capitalist economy of the United States has been surpassed by the Chinese government. Only time will tell. Who knows? Nobody knows. I mean, some will say it's anarchy in the streets. Others will say, well, it could be a reset where there's actually great opportunity for entrepreneurs. I'm kind of in between, right? I believe, and I did an interview with Kerry Lutz on his Financial Sense Network where I talked about, look, I think that a collapse isn't going to be bad for everybody. In fact, for about 30% of the population that's prepared, that's ready, that's invested in themselves, that has some kind of business, that has knowledge to add a value to the marketplace, because there'll still be markets, I think they're going to do just fine. But for most that are ill-equipped, they're going to do horribly. Now, since 2008, the Fed had a balance sheet of about $800 billion. Today, it is about $4.5 trillion. Some on the Federal Reserve boards, like the guy in San Francisco, Bullard, and some others, are wanting more QE. But according to Janet Yellen, who is the current Federal Reserve chief, she says, well, we're going to still keep interest rates at record low. We're not going to raise those, but we're going to stop the QE. Now, I think there'll just be some kind of crisis that has them openly come out and announce, maybe not more money printing by the name of QE, but certainly they'll use some other kind of scheme or some other name or some other mandate of why it's needed to keep the economy propped up. Now, they're using phony, economic figures to say, oh, well, no, we're going to end QE because of the fact that the labor market's below 6%, the unemployment rate, which we know is totally bunk, a total fraud, the largest increase since the 70s in the labor pool, people that have dropped out. It's the largest in 30 plus years. So certainly the economy is not getting any better in that regard. It's not getting any better in wages, although they try to say, well, inflation's barely creeping up. Well, of course inflation's maybe barely creeping up because they don't include energy and food in those models, as we know. So here's the thing. One of the things that I've been saying for some time is that we'll see a stock market that hits over 20,000. We'll see a real estate market that goes much, much higher. I still hold to those forecasts. The stock market today, remember, a couple weeks ago, the stock market was tanking. People were kind of freaked out. And it was because the Fed was saying, well, we're going to end QE. Well, today it's over almost 17,400 points. Why is that happening? Because I thought, well, if the Fed ends QE, the stock market will collapse. Well, it will collapse if the Fed truly ends QE. But we know that the stock market is also roughly 80% of it is high-frequency trading, much of that manipulated by the big banksters. What do they know that's having them buy more and more stocks? And I think that's the fact that the money printing is not coming to an end. Here's another thing. How do you keep interest rates at record low if you don't continue to reinvest or continue to buy more and more treasuries in the open market. Well, the 4.5 billion, if the economy is doing so well, you'd think, well, the Fed can just sell those 4.5 trillion, not billion, trillion with a trillion with a, what is it? A WTF is what I heard a couple weeks ago, which I thought was funny. But what are they going to do with the 4.5 trillion in mortgage-backed securities and in bonds? Actually, the 4.5 trillion doesn't include the mortgage-backed securities that are totally worthless pieces of paper. Well, they're not going to sell them because no one will buy them. And that begs the question, well, who really is buying U.S. debt? If the Fed had to buy over $4.5 trillion of debt since 2008, and they stop, who's stepping in? Yet, how do you still keep interest rates at record lows? You see, none of this jives anymore. It doesn't make any sense. But just like, the Obamacare bill had death panels in it, and if you said that, you were called a conspiracy theorist. Just like Obama said you could keep your doctor if you like it, that was a total fraud. Just like they say that Ebola isn't contagious if someone sneezes on you. See, it's all a fraud, and it's like this fantasy land that we're currently living in when it comes to the economic bullcrap that we hear from people like the Fed. One other point that I wanted to talk about, if the economy is doing so great, particularly in the West, the ECB is announcing their own QE program, which started, I believe, on Monday. That's the ECB, is the European Central Bank. Like the Fed, they're not as powerful as the Fed. They're not as powerful as the Bank of England because of the euro, and it unites all these. So you can't have, Germany start printing money like crazy because they're part of the ECB. That's where their funds come from. It's the ECB who prints the euro. So ultimately, we know Western banks are propping up the U.S. dollar, 60% of their reserves, and that's dwindling, but are still in U.S. dollars. And so these are now working in tandem. They're working together. So if money printing is happening now in Europe, is it possible that the way the Fed is printing money is now by investing in bonds from the ECB, this reverse backdoor QE? I'll keep to and I think I'll be proven right in 6 months to a year, that truth will come out that QE never really stopped. It will continue. It's how they keep interest rates record lows. And we will see the Dow, in my opinion, hit over 20,000. We'll see real estate markets continue to go buck wild. All manipulation. Let me just be really clear about that. This isn't real, true, free market capitalism. We haven't had that for decades. That's what I want. I'm a champion, or I'd like to consider myself a champion for true Austrian economics, true free market capitalism. But we don't have that, ladies and gentlemen. We have oligarchs, crony capitalists that have hijacked our republic and hijacked our economy. One last point that I wanted to just mention is that the Fed, by purposely keeping interest rates at record lows, is literally like a thief in the night going into your house and stealing your money. Over $9 trillion stolen from the middle class since 2008 by their almost 0% interest rate policies. Love to hear what you have to say about this. Again, remember the new Fabian Calvo Show app is on iTunes. You can now search for that for any of your Apple devices via the App Store. Thanks for watching. I'm out.